Hey, welcome boys and girls to the 40 Finance Show. We've got a lot of volatility going on for many obvious reasons. 2 or 3 weeks ago, everybody was worried about interest rates and inflation, and now obviously you have the Ukraine-Russia situation on top of it. So suffice to say that the next 2 or 3 months at bare minimum are probably going to be very volatile time periods. And I think as much as easy as it is to focus on the negatives associated with that, there's another pretty big opportunity here for growth investors, because we've seen a ton of those stocks go down, and particularly on the cheaper side. So I just did a video maybe a week ago or something about stocks under $20. And on the cheaper side right now, there are stocks under $20 that have an EPS, that have growth projections that are, relatively solid considering the unknowns. And the fact of the matter is that you can get into 100 shares of these stocks and sell call options on them. And the volatility in the market right now is so high that it could be a really good way to make some money in a time where it could take a while for stocks to really bounce back. And I do think that stocks are going to bounce back. I don't think that this is a depression by any stretch of the imagination. I think the good news heading into this conflict that we're seeing in the world, the good news is a lot of stuff on the American markets has already been crushed. Not to say that it can't go down further, but we are seeing a lot of stocks that are already hurting, and now you're kind of getting this like knockout punch, which to me just means if you're a long-term investor and you've thought about some companies for over the long term, I can see a lot of rationale for trying to get to 100 shares of your favorite stocks and just selling shorter term call options on them and just trying to make money off these days when literally whenever you wake up, you're not sure if the market is going to be up or down. So that's the general take here. And I'll go through a few examples of stuff that I'm seeing, stuff that I'm very close to, if not over on 100 shares. And I think all these stocks are relatively, stable's a tough word. Stable is a tough word when we're talking about volatility. But what I will say is for most of these stocks, I will say that they've been crushed hard. And because of that, you might be looking at the bottom with an opportunity to use call options to make yourself some money over the shorter term until we see a market recovery, which in my personal opinion, I think that a strong market recovery is in the cards for the second half of 2022. I've used 4th of July as just an arbitrary thought process, deadline on when I think things start to bounce back, but it could happen before that. And if you haven't been watching the market, like every day is a coin flip on the American markets on which way a lot of this stuff could go. So do not, with all the negative headlines, I encourage you not to just focus on negativity. I encourage you to think about some of the positive things that can come out of this mix. So let's jump in. We'll go over to Yahoo and see where we're at today. And obviously you've got no shortage of FOMO headlines on a day like this. U.S. home sales fall, Russian attacks may, affect what Powell's doing. Stocks are selling off on, on this attack. And if you follow some of the, I wish I would have brought that up, but if you follow different people on Twitter and stuff, there's a couple timelines going around in relation to war and international unrest as it pertains to the stock market. And it was pretty fascinating to see that a lot of times after the war has started, the stock market actually bounces back pretty hard. In fact, there was very few international events that did not show weakness heading into the event. And then once reality struck, we started to see an upward swing. Now, obviously, I'm not promising that here. I'll try to take a look here on Twitter. If you guys are patient, I'll try to find that image because I thought it was very interesting. Let me get a refresh here. All right. And there's a couple ways on this 100 shares that I'm looking at anyhow. And the first one that I got good news on yesterday was my Magnite shares. So Magnite is a basically an ad tech firm that specializes in connected TV. There's not a lot to them, market cap under $2 billion. They had a great earnings call, and out of all the stocks that I've been through bumpy rides on, Magnite has come through and basically delivered on what they promised. Now, unfortunately for me, let's go to the 1-year chart. As good as this is, which that's kind of funny, 1279 up 1279%. You can see where the stock was a year ago. It's $50. So good news is probably in the eye of the beholder. I'm sitting around $22, and that's after averaging down significantly. But here we are at 1279, and if we just look at some of the options, let's see which ones we want. We'll try March 18th. And if I'm at 22, there's not a lot there for me at that current price, right? Because you've got, 6 cents, 10 cents. But if you just got in at this price, 12.80, and you're probably going to want these numbers to reset a little bit, there's plenty of opportunity for a relatively, low risk, low return option in Magnite, and I have a feeling, these numbers are already up. I have a feeling that they continue to go up. I'm in a weird position at 22 some odd dollars that I need to wait, maybe just a little bit longer. I either need to buy 100 shares and bring my cost basis down in this neighborhood where I can play the game, or I just need to wait for the price to go up in general so that my $20 is more in range. I don't think that Magnite is just going to absolutely destroy it for the rest of the year. I think this is a slow grind, and they have a lot of exciting prospects. Let's see, what is April 14th? You can make about $80 if you don't mind waiting that long. So there's some options. That's just the first one that I want to throw out. Derek Ridlin, good to see you. Derek's struggling to look at stocks. Nothing makes sense. Trust the process. And I think, honestly, that's all you can do. I really do. I think that's all we've got right now. Okay. Let me go back here. Wanted to find my stocks under 20 because I think that's most applicable. Palantir, oddly enough, this is one where maybe you don't think a whole lot about the options, but this one's gotten hammered, and yet it is somewhat profitable, or certainly projected to be by the end of this year. We'll look at March 18th. So if you do not own this one and you are thinking about giving it a shot at a discounted price, I would argue a discounted price, you've got some money here. You can buy your 100 shares for, $1,100 right now, and right off the bat through March 18th, you can take out the risk and make $56 on the 12s, and then on the 13s, which are a little bit higher up, there's still $33 to be had there too. So that is an option that I would consider. I have Palantir roughly at $20, so similar to Magnite, I'm getting stuck where it's just a little too high. I own this company, Sabre, not profitable, very, very, very sensitive to travel news, and right now travel is getting destroyed. But depending on the day, my cost basis is $11. And sometimes I've been up a little bit, like 11.50, 11.79, something like that. Let's see what these options are. These are probably pretty cheap. Let's go March 18th. Yeah, so, depending on what I want to do, you got 80 cents on March 18th. If we extrapolate out for another month or so, it starts to turn into decent money. $51 here, $73 at 12, depending on how far it goes down. Prior to the war announcement, this one has run up on travel being sort of back in gear again. And I think most of the airline stocks and stuff have noticed a boom because TSA numbers are up significantly. Now, obviously, we're about to lose probably a portion of international travel with what's going on in Ukraine. But travel stocks are very intriguing right now, okay? So take a look at, your favorites, whatever you've been watching. Maybe it's hotels, maybe it's whatever. Travel crushed Visa today. Let's see where that's trending. Only down 2%. It was down a lot more in the morning. I have a cost basis in Visa of 190, and if that stock got anywhere close to that, I think I have 55, 60 shares of Visa, something like that, at a 190 cost basis. If we go close to 190, I will do everything I can to get to 100 shares on Visa, because that's just, I think that has a ton of opportunity. And then you're talking about a $200 stock. So the options become a little bit better. Yeah, so you can start talking about $400 on the 215s for March 11th, $192 for the 220s. That's decent. You got to put up some risk that they might take your shares away, but it really just depends on your outlook for the market going forward. Now, if you want to get crazy, which I'm thinking about getting crazy. So TQQQ, this is 3 times leverage QQQ. We all know the risks here. There's a ton of risk involved with this. But the reward, so if you want to play tech right now, when everybody and their mom is telling you that tech is toast, get out, buy corn commodities and buy oil futures, and that's where the money is. In my opinion, that's probably the exact best time to get into the Qs, and that's exactly what I'm doing, both on the regular Q level and the T level. And what's great about the T, if you want to just have some fun in the background, is obviously it's relatively affordable. 100 shares of it is going to not set you back. I mean, it's an investment, right? It's $4,500. But take a look, because it's triple leveraged, if you want to go just bonkers on covered calls, you're talking about a 50 for March 18th is paying out $200 some odd. Now, you might lose it. So that, but if you play the game in this volatile environment, I mean, this one could easily go down to 40, right? Just on the next time Russia does something intriguing. So the covered call option, I think with the Qs, because we're in such high volatility, I think there's something there. And quite honestly, I'm going to probably dabble with it a little bit. You guys may have watched my video that Kevin Hawthorne, how you doing? You guys may have watched my video on TQQ. I'm doing the long-term strategy. You can find, just search in Reddit is what I would recommend you do to learn more about that. But along those same lines, we also have the 3X semis, right? And those are hammered because right now we're back into supply chain. We're back into all these concerns that, TSM, frankly, is right in the crosshairs. Excuse me, because we're already looking at Russia did this. Russia, has at least decent relations with China. How we react to Ukraine may influence what China decides to do with Taiwan. So I'm biting my nails a little bit on my TSM, and it's something that I have to think about because those rumors are going to come in hot and heavy depending on how this Ukraine thing all shakes out. And I'll be honest, like TSM, they would be hurt significantly if we saw like a replay of the situation in Taiwan. Now, there's nothing on the news that suggests that that would be the case, and I've studied that a little bit myself, but the dynamic is always changing. The dynamic is always changing, and what Russia's doing now changes the way, China views us and views Western allies in general, because they're just saying, let's see how they respond to this. Ukraine is a nothing burger at the end of the day. Let's see how they respond to it, and if they trip up, maybe we'll go for something bigger. So something to think about, but semis in general, regardless if you want to do 100 shares or not, they're getting crushed. They're not going away. So it could be something to think about to DCA into something like this or the actual index. You don't have to get the leverage version. You can get in the actual index, right? Which, I'm not exactly sure what the exact index fund is for semiconductor, but it's out there. There's SMH, but I can't tell you if that's the best one or not. SMH, there's SOXX. Long story short, here's your 5-year on semiconductors, right? And back in 17 and 18, we actually had oversupply. So you can see how that investment, which is not leveraged, it's just a play on semis, you can see how that investment stacked out. Just out of curiosity here, let's see how that stacked out to the Qs. Oh, I picked the wrong thing. Comparison, S&P. All right, so semis 1 year. Semis are plus 8% 1 year ago today. They're plus 5, and the S&P is plus almost 9. Let's throw in the Qs for fun. So these guys are probably going to be pretty close to each other. I really wish that I wouldn't have picked purple. But Qs are single digits, 2.72. Semis are 5.8. And S&P, which has been the big winner during these volatile times, is up to 9%. Let's go 2 years here. We've got S&P 26, QQQ 43, and SMH 76. All right, and that is with NVIDIA finally getting touched. Okay, NVIDIA was untouchable. Now we're at whatever. I didn't look at it today, but it was approximately 235 yesterday. There's a lot to be said for the semiconductor industry, and frankly, there's a lot of companies on there that I like. So I have thought about what I'm doing with QQQ right now, and I'll get to your questions. On QQQ, I've talked about it a lot this year. The bottom line for me on this, and I'm not talking about the leverage version, which I experiment with. I'm talking about the fact that I bought the Qs, continue to buy the Qs when everybody told me that it's stupid and we're all going to die. But I'm so comfortable with it because of who's gotten chopped, right? In general, I like Netflix as a business. I like their long-term outlook as far as home entertainment. So we'll start with there. And they're the ugly, redhead stepchild of FANG. They're chopped significantly. I would argue that Netflix is a deal to some regard. NVIDIA, we just talked about. They're in the top of the queues. We know about Google. Google, some reason, is trading for $2,500 despite their valuation, which is absurd. So I like Google there. Apple, you can't bet against. They're getting hit right now, but you can't bet against them, right? Microsoft, I did a video for entertainment yesterday. You know, do you sell your Microsoft winner and buy the Facebook loser for the outlook of 3 years? Good news for me, I have them both in the queues, okay? And that's where I really landed on the FANG stocks, and there's probably somebody I'm forgetting. Tesla in there, which I have zero interest in holding as an individual stock. It's getting smashed right now. But let's just say Tesla goes up $1 bazillion. The QQQ is so freaking top heavy. It is the heaviest of top heavy ETFs. And that, in my opinion, is good news because the top companies that are in there that weigh about 50% on that portfolio, they've gotten hit. They've gotten cut. So regardless of what we think about our personal opinion about Tesla, of which mine is mixed, I'm glad they're getting sliced because I'm buying the Qs, and I think that Tesla has a better than not chance of eventually going up again. Same with Netflix, NVIDIA, Google, Amazon, you name it. I think this is, personally, I think it's a good time to buy the Qs. Sorry for the rant. All right, let's say hi to some folks. Let me get a drink real quick, Derek. So Derek says, how in the heck is Facebook under 200? I honestly, I don't know. I did that video yesterday, which I think people got it. I tried to be very, like, this is surely a discussion point about selling Microsoft for Facebook. I own the Qs. It doesn't really matter to me. If people were to do that, but I could, like, you could make a strong argument for right now, you own 0 shares of either. I would have to say that based on valuation alone, Facebook has more upside than Microsoft. So that's why I did that video. It was a random thought I had, and it looked like it was a pretty popular video, so that's good. It's good for my channel, popular by my standards. But just where Facebook is, and Derek mentioned a couple others, didn't he? PayPal, yes, Alibaba, all of those conceivably have more upside than Microsoft, not because Microsoft sucks, just because Microsoft is still one of the few that I think is at a 30 PE in FANG world. Let's put it up. So again, don't get me wrong, these guys are crushing it. I said that in the video. They're absolutely crushing it. Now, this downturn is all market valuation related. But yeah, trailing 12 months, they're in a 30. Yahoo will switch to annual. Trailing 12 months of a 30. You've had some in there, but if you go back, say to 2019, this 2018, I don't think that this is really where Microsoft traded. 2018, there's obviously some anomaly happened here. But you're in the 29s, and then forward PE, let's see what we've got. Forward PE is where it really stands out. 32-ish today, and back in 1918, 17, 16, you know, pre-COVID times, there was no way that it should trade over 25, right, on average. And of course, we know in the rearview mirror how much money printing and low interest rates did for the valuation of stocks. But there's a better than not chance that we're coming down from those lows. Now, does it go from 31 to 20? Probably not, right? Probably not. 2019 was 18 and 19 had lower interest rates. or excuse me, had slightly higher interest rates than we had today. So maybe it's a 25, 26, 27. Either way, the 31.45 is not up for discussion. Like, this has more room to go down. We'll see what happens. You know, PEG ratio, 2. Well, that's not too far off. I mean, nickels and dimes down here. Price to sales, though, there's no way a mega cap stock trades at 12 on price to sales, right? We should be down in single digits. Probably you should be down into the 7.6s if you just want to talk about historical average. So again, Microsoft will be awesome this year as a company. They will outperform as a company. I do have minor concerns about their valuation, whereas I think with Facebook, in comparison, you are buying low. You are buying Facebook low right now. You do need some tailwinds to push it up. I say they have the IQ power and the existing cash flow to do it. The rest of it, though, is a guessing game. All right, great stock vortex. Anyone like Starbucks or CRM? I haven't looked at Starbucks in a while. I think I included them in an undervalued video here recently. Let's take a look. Oh, you know what it was with Starbucks? They were in a video I did where the price today, let's look at the 5-year chart. That's August 2019. Here's December of 19, pre-COVID. And Starbucks has China locations, so they probably got hit with COVID faster than the US did. So yeah, this is one that if you went to bed on December 1st of 2019 and you woke up today, Rip Van Winkle style, the stock's only up, you know, $2. And in that same time, see if we can do that, in that same time, minus 2020, they have made more money. So if we go back, I don't have the little slider bar on this, unfortunately. Darn, where is that stupid thing? There it is. Let me try to squeeze this in. All right, so here's 2018. Fiscal year revenue, $24.7 billion. 2019, aka pre-pandemic, $26.5 billion. Pandemic year, I mean, not terrible for store closures and general pause on the economy, 23.5. And then this last couple stretches, you're up into the 29. So you're well into all-time highs on total revenue. Let's slide for the trailing 12 months. So this one ended in September. So we basically added another quarter to trailing 12 months from this time frame, and you're in the 30s, right? So yeah, I can understand the thought process on Starbucks. Now I don't follow them enough to know how their China relationship is going. I think that's been sort of an up and down. I was trying to see if they have the same amount of shares. I think that's on the balance sheet. Shares issued. Let's do ordinary shares number, which looks to be about the same. This is 2017. You had 1.4 billion. Oh no, 1.4 million. I'm losing it there. I don't know, but it went down, down, up slightly, back down. Today, it sits slightly below the 2019 number. All right, so maybe they were doing some buybacks. Looks like they were doing some buybacks, as a matter of fact. So I don't know. You got a Morningstar fair value of 106. You have the safety of coffee in the sense that America's addiction certainly isn't going away. I'm more of a Diet Coke guy, so I actually rarely go to Starbucks. unless I'm picking something up for somebody else. But yeah, man, great stock vortex. I think there's probably something here, particularly for the long term. And hopefully most of us, that's the game we're in. And there's just a lot of long-term deals right now. As far as CRM, I haven't looked at that in a while. Chestad's scaring me on Taiwan things because of my TSM. I really do need to think about selling that. I'm up slightly, like I'm $90 a share. They're just going to get crushed if the Taiwan stories come out. CRM, let's see, pre-pandemic, Jan 1 of 2020, they're at 182. And if I remember correctly, they've had good times in the pandemic, right? Because people have to work from home, and it's basically a sales platform to stay in touch with consumers and whatever. Forward PE of 42 is certainly better than this stretch here. How we doing on growth rates? Because that's going to come into play whenever you're in the 40s. Still projected decent, 25% this year, 20% next year. EPS trend is going up. 90 days ago, 443. Today you're at 468. Next year is going up too. So yeah, 5 years growth estimate is plus 10%. You know, it's not as high. It's definitely not as high as the years prior, but I don't know. I wouldn't say it's a terrible play by any stretch of the imagination. And again, if you're in 5 years, I mean, this company's done some acquisitions, right? And they'll likely continue to do so. How has their share count been? I think since they're a growth stock, they probably haven't done a whole lot there. No repurchase of capital stock. Sometimes those things just go away, though. Shares issued. Well, shares issued going up. I'm not saying that's the worst thing in the world. I'm just saying it's notable in today's environment because there are so many, and this is usually the old stock-based compensation that people worry about. I've been paying a lot more attention to shares outstanding in this environment because there's so many companies that are just plowing through buybacks, and I'm not saying that's the best way to spend capital. However, if you're cash rich, aka Microsoft, right? Potentially Facebook's bought back shares. Of course, their shares, tanked. So now people are like, what a terrible investment that was. But bottom line is there's less shares out there for you, particularly if you're buying today. You don't need to worry about the ROI on Facebook's buyback program. If a company's doing it the right way, they're saying there is no other investment right now that makes sense. And then you talk about who else was up there. Google, significant buybacks, and there's tons of others as well. So patched together, how's the war affecting Russia's stock? So I wish I knew. I don't follow any stocks in Russia. I will say in regards to that question, it's very difficult to find geography information on some of the big dogs. So I was on Apple today. Apple Investor Relations. And not everybody does this. In fact, very few, sadly. Let's see. This is press release. I don't know if that's what I want. I'd like to see the presentation, I think. News and results. Newsroom. Here we go. 2022. Geez. Guess it is all about the press release. What was I looking at then? I found somewhere, let me try SeekingAlpha real quick. So the short version on what I'm trying to show you is that Apple, the last deck that they had, maybe we have to go back this far. Well, Apple has geography information. They talk about how things have done in relation to geographies. So why in the heck fire it's not on here? I don't know. Let's see if they do it in countries. See, this is consolidated statement, so it's not going to be on here. But you can go back and somewhere, somehow, you can find how, like, Apple's doing in China, for example. Unfortunately, that is not here. And press release, financial statements. Just kind of goofy. Well, sorry guys, they don't have it. I'll tell you who does is Meta, Investor Relations. So again, we're talking about trying to figure out the impact of this on your investments. So Meta does advertising revenue by geography. And then you have to play the game with them. Do they include Russia in Europe? Or do they include Russia and Asia Pacific? That's not as easy to figure out because everybody has a different opinion. There's a lot of people that would say the bulk of the Russian population sits in the European region, so they would attribute it to that. And if that's the case, you know, this is what Europe means to Meta, and keep in mind that Europe has a lot of countries, right? So does it take all this away? How much is the Russian portion worth? I don't know. But if you can dig into your companies and find revenue by user geography, or it's probably just revenue by geography, that's where you're going to find that information. Unfortunately, as you saw me stumble there on Apple, and I also looked at Microsoft, they do not have it. We could try Google just for fun. Do one more of these. Press release, webcast, transcript, PDF. Yeah, I don't see a whole lot in here. I got some foreign currency exchange segments. This is what most tech companies do. They're going to play in segments, which is fine. I mean, that's arguably more important. However, when we're trying to identify how Russia could impact their broader business, it's not as easy when they just use segments. So anyway, all right, who else is here today? Second, we've got Great Stock Vortex buying Facebook, actually been buying 2 to 3 shares every day. Also added 1 share of Google, just over 2,600. Sounds like good deals to me. I mean, the Google one, I mean, it's almost too good to be true at $2,500. I don't know where it is right this exact second, but, you know, I did that video not maybe this week, and it's just like fundamental valuation on Google, particularly with their earnings per share, which come in at $112. There's, you know, there's a lot to like in Google right now. Even if your worst case is you don't see growth like I do, I would say that Google's valuation right now is just safe, right? It's probably similar to Microsoft, but the exception here is Google's at a 22 on their trailing PE ratio. And if we go to forward, they're saying And they're saying 22. That's not right. Yeah. So I don't know what that said on Yahoo, but this year the expectation is 115. Last year it was 112. So it should be going down at least a little bit. And as we talked about on the last video, Google is, doing very similar to Amazon, Facebook, etc. They are reinvesting in segments of their company, so their EPS is expected to come down slightly because of that. And you can see what we're anticipating, or the analysts are anticipating next year, is that it takes a huge jump up. And ironically, the title of this video about buying the 100 shares with that stock split they have in July, there's something to be said for, do you do everything you can to get 5 shares of Google right now to get to your 100 shares in July when it does split, and then you can play the call options game too and not even just make more money, right? Just make basically a dividend from Google, just knowing that it's not going to see plus 30% in a day, right? So just buying weeklies or selling weeklies slightly out of the money as much as you can stomach, and I don't know, it's like making a dividend out of Google stock. I've been kicking the idea around quite a bit for the past, 6 or 12 months, easy. But now I see a lot of opportunity because of this volatility, and not just in Google, in a lot of places. I just think that this market is a roller coaster, and I'm feeling positive that it will go up over the longer, not even the longer term, the second half of 2022. But nothing before that time would surprise me, especially after the news that we got, today. And now you're asking Jerome Powell to make decisions here on March 15th or whenever the hell, they get together. And it's going to be intriguing. All right, Riff Raff, Tesla was under 700 this morning. Clean energy could be a winner when the oil stock stop pumping. And I can see that, Riff Raff. I really can. I'm still watching things like solar. Solar Edge was one. Sorry, I don't have the screen up. SEDG, as well as Enphase. These things just, they go through these dips and then they just pop right back up. So it's intriguing, but at $3.06, I'm not in on that valuation in this current market. Regardless of their growth, right? Because here's where solar was, and granted, it might as well be 100 years ago with the advancements that they've made, but solar was in this, call it 20x forward PE range, and believe it or not, Enphase was right there too, and now you're still riding the sugar high. It's come down, but look at this, plus 7% today. And maybe somebody has tilted the conversation to say, guys, oil's too expensive, everyone's going to buy solar. It doesn't happen like that. It takes forever to build this stuff out, and I think it will be an important part of society, but it doesn't just happen tomorrow. Not in the way these stocks are priced. I mean, Enphase, for as much as it's got battered, prior to open today, 50x forward PE. I mean, it ain't growing that much, okay? 43% maybe this year, 30% next year. The 43% is impressive. If I just don't know, Solar Edge is trading at, what did we say, 39 times? They've got 45% this year, 22 next year. So it's just really hard for me to figure out how solar is being priced. SunPower, I think they're losing on EPS, yeah. Do they ever get profit? Well, they might hit profitability this year. So this could be one that you played the 100 shares game on because it's very cheap, $15.74, and certainly volatile. All right, buy the dip. 4.9's fine, absolutely. Great stock vortex is holding long. I think all of us here that are playing the long game are, I don't know. I don't want to jinx us, but we've got to win on this dip. I mean, it just makes so much sense. And we're not even talking about anymore, we're not talking about a vanity dip, right? Valuations were up to nosebleed levels. Then maybe they came down to fair, and there's still some that are not fair yet. We just looked at solar. But there are others that are legitimately undervalued, and we haven't seen that. We haven't seen that in the market for a long time, like a really long time. And so for me, it's just refreshing to run a stock screener of any kind that has an emphasis on value and see names pop up. Like, it was really that bad last year in 2021. It was that bad that if you wanted to find a value play, it didn't exist. And I'll tell you what happened to me is I got bored and I just bought stuff that I liked, that I thought sounded good, because it was very obvious that value wasn't going to be a thing anytime soon. But now here we are. So sell what you don't like if you're profitable, and get into stuff that you don't. If for me, the stuff that I'm woefully unprofitable on, the underwater plays, I'll use Palantir for an example. Zero interest in selling it here in February. I mean, the tax write-off is valid through December, right? So I'm just hanging on that. But if you have something like TSM, and if Taiwan, I mean, I'm getting so nervous about that. I probably, I'm up in TSM. So I have to think about that. Do I just want to take my wins, which have been okay, about $90 to $110? It's something, it's just something I have to figure out. Derek's here. Let me get a drink. I'm going to start paying attention to Dynasty Fantasy Football. This market is giving me an ulcer. Dynasty Fantasy Football is for real. It's been a while since I played in one in a league like that. The best version in Dynasty, in my opinion, is the one where there is, I think it's like 3 holds. So 3 players back, then you redraft, because it's still fun to do the draft with your friends. In my opinion, it's still a reason to get together. But it's not going to be fun if it's all losers on the block. So the one I played in for many years was hold 3 players, and the maximum amount of time you can hold that player was 2 or 3 years. And the commissioner kept track of where that player was drafted, and that draft pick you lost for the redraft of the year. Short version would be you took the number 1 guy and you've held him for 3 years. Each of those 3 years, you also do not get to pick in the first round. So the incentive, obviously, is to take Joe Burrow, right, in the 10th round or something, and then you've got him, and he only counts against you as a 10th rounder for 3 years. So kind of a cool way to play it, or I enjoyed it anyway. 4.9s, what's Google's growth rate next 10 years? I don't even think that I don't think we can project that. I cannot project that, but I would say one of the best tools for it, let me switch over, is this table view that SeekingAlpha uses. One second. Earnings estimate, annual. Squeeze this in. So let's just go to revenue. So they will project out for as long as analysts have submitted. All right. Now you can see the key here is number of analysts. So when you're driving to a consensus, one of the reasons that Google and Microsoft and Alphabet and whatever are somewhat easy to project is because they're so big that it takes a lot to move the needle. And they're so big that 39 analysts make a projection on their growth. So that many data points on a consensus level is solid, right? Obviously, you'd prefer to probably have 1,000 if you're doing some sort of scientific test, but 39 is solid. And so we have to stop. We probably have to stop about here, which is 2026. I mean, 7 isn't great, and we don't know when that was updated, but they do say plus 12% over 25. So you have 17, 15, 14, 11, 12. No one is reporting anything short or guessing anything short of double digits prior to 2027, right? That's pretty strong. And did you see how funny that this is funny? The 2027 forward price to sales, which I know probably doesn't matter, is 3. I mean, that's crazy. I get it. It's 5 years away, but it's still crazy. And then EPS-wise, you got 4 people for 2027. They say $234 per share, forward PE of 10. So today's forward PE for the year 2027 is 10. Now, to be clear, these are dart throws, right? I would say anything that you hear someone say, especially someone of my sort of like hobbyist caliber, if they're talking 5 years, fuck off. Like, you can't do it. You just can't do it. I'm sorry. You got kind of these 2 years that analysts will play in. You can make your best guess for 5 years, but if you read an article and somebody's referencing 5-year stats, 5-year look ahead as fact to base their valuation, I think it's hogwash. My 2 cents. Lions here, good to see you. He added Facebook, PayPal, Berkshire, and S&P ETF for his mom. I don't know S&P, if I got that right. Now you said S&P ETF? I don't know. S&P is China Petroleum. She has much lower cost basis than I do. I would add BABA, but I don't want any more exposure. Yeah. If I was fine buying these companies at plus 25 from their current valuation, yeah, low on cash, I feel you. So I'm in a weird spot on cash, and maybe some of you guys can feel this pain. So I have my standard 10%, but I also have taxes coming up. And until, until I run the tax numbers to figure out what I owe Uncle Sam, I have to be careful because just the way my taxes are, and there's a couple business interests and stuff in there, like it's not just predictable. It's not just like, oh, we're a family and filing jointly and we got this. It doesn't work that way at my house. So I have to run the numbers and see what the obligations are going to be. I also have quarterly tax payments for the businesses. And with quarterly tax payments, they're a real bitch because they can, there's a level that they can land at that can be higher. And you have to call them basically in advance, right? You have to project them in advance because any part of your quarterlies that falls under a certain threshold, you get additional fees on, right? So I have to project what a business will do. So let's just say I have to project that, or I decide to project that the business does $20,000. And that's where I fall. Well, if the business booms and hits 50 and I don't pay quarterlies above that level, then I get interest expenses for basically like hiding my tax liability, right? So underreporting tax liability. It's nauseating, to say the least. Riff Raff says Biden's coming on at 1:30. I'm actually about to head out and get some lunch myself. Lion got 100 shares of DraftKings, Palantir, those companies on the shelf. That's awesome. I think both DraftKings and Palantir, take a look at the selling the call options, because I'm going to start looking at that with my 100 share companies just to make some dividend, even if it's nickels and dimes. Just trying to hit a point where you're making something and just learning the process, because I've never done it. That's where I'm going. Just at Amazon under 3K. I'm hoping it starts moving. Yes, Amazon. So that's my next stock portfolio update, which will probably be in the next few days. I'll share the blood and guts. So when Amazon got to 32-ish lately, let me tell you when that was. I think it was right after earnings. Summary. Year to date. Was it 31.62? Right here. Early February, it was in the 32 range. That was very slightly above my cost basis. So I sold my 3 shares and putting the money in the QQQ for all the reasons I talked about earlier. Because it has Amazon, Apple, etc. I've decided that I do not want, while I will still follow big name FANG stocks, I don't think it's worth trying to pick one over the other, is the realization I've come to. So I'm going heavy on Qs. Amazon was part of that. I did not lose any money on Amazon, but I did not gain any money on Amazon. And I do still believe that second half this year, particularly when they project into 2023, that stock has to get close to 4,000 soon. It just has to. There's too many big things going on. Lion says Elon sold at the top. Kathy bought at the top. CEO sold at the top. Yep. It's we're in a whirlwind, guys, but we have to remember, and everybody will have their own take on it. Like, there's no denying there's opportunity out there right now. When we thought there was opportunity, stuff was just going up over and above what it should. Now stuff has come down, in some cases to reasonable levels, and there's more pressure on those prices. Like, there's opportunity here. You have to pick your spots and, do your research, whatever, and I don't have the magic pill for it. My magic pill right now is QQQ for the long term, and build that up to a spot where it is the anchor of everything going forward, and then playing off of mega cap names for the rest of the portfolio, right? So the smaller caps, the mid caps, and stuff like that. That's just the way I'm going to go, because I think all the FANG names are arguably viable right now, certainly for the long term. Certainly for the long term. I can't buy 100 shares of Google, Amazon, Apple, Microsoft. I can't. I don't have the money. Facebook, etc. So I'm going piling into Qs a little bit at a time, and I think I'm still stuck about 370 on my cost basis there. But I also have the TQs on the back end that I'm managing much more closely to make sure I don't go under too far. So anyway, guys, hope you guys are doing well. Thanks for coming out for this one, and we'll see you on the next video. Good luck with your trades this week. Hopefully we will be rewarded in the long term. Have a good day, everybody.